Star Media Group shareholders voted against a proposal to sell industrial land to Matang for 33 million ringgit in a share and cash deal. The land aside, this deal would have included the sale of factory buildings, which will be developed on the Bukit Jelutong plot by Star Media at an estimated cost of 14.8 million ringgit. In an EGM this morning, 46% of shareholders who were present, holding 81.7% of voting shares, rejected the resolution. 53% of present shareholders, holding 18.3%, voted in support. The MCA, which holds 43.23% of Star Media, did not vote. The political party also owns 17.15% in Matang. If it had materialized, the deal would have resulted in the media group having a cross-holding of 13% in Matang. During the EGM, Star Media Chairman Tan Sri Cho Chi-hyong said the proposal to build the properties before selling it to Matang provides an accessible platform for diversification initiatives. He also gave his assurance that he and independent director Wong Yu-fong, who is also MCA Wanita chairperson, are not nominees of the BN component party. Shares of Star Media settled 5.95% higher at 44.5 sen, valuing the group at 328.66 million ringgit. Fugitive financier Low Jho is believed to be under house arrest in Shanghai, China, said an American journalist. Former Wall Street Journal reporter Bradley Hope said in a tweet that Jho Low was in Macau a lot from 2015 to 2018 and also in Hong Kong, Shenzhen and Thailand. After then Prime Minister Datuk Sri Najib Razak's electoral defeat, his movements were restricted to the Chinese mainland. Hope said Jho Low went from an intelligence asset to a liability. He believes the fugitive financier is now being held in China on a tight leash because of negotiations with Malaysia and also because his patrons in the spy services have been arrested and business partners at China Communications Construction ousted. Separately, the lawyer for the family of Kee Kok Thiam, a former aide to Jho Low, said Kee died due to a massive stroke. It is understood that Kee suffered the stroke on Saturday and was brought to the Sungai Buloh Hospital before passing away on Monday. CIMB Group Holdings saw its first quarter FY 2023 net profit grow 15.3% to 1.64 billion ringgit, driven by sustained operating income growth, strong cost controls and contained level of provisions. In a filing with the board today, the lender said this translated into a strong improvement in annualized return on equity of 10.3%, compared with 9.6% recorded in the first quarter of FY 22, with earnings per share of 15.4 sen versus 13.96 sen previously. However, net interest income dipped marginally by 0.8% to 3.52 billion ringgit due to net interest margin compression caused by heightened deposit competition, though that was partially offset by strong loan growth momentum. Moving forward, CIMB Group CEO Dato' Abdul Rahman Ahmad said that the bank adopts a cautious view as it approaches the second half of 2023, given the economic uncertainty, and will focus on the execution of initiatives under its Forward 23 Plus plan. CIMB shares closed 1.43% lower at 4.82 sen for a market capitalization of 51.41 billion ringgit. Capital A posted its second straight quarterly net profit amid the ongoing resurgence of air travel demand. First quarter FY 2023 earnings came in at 57.1 million ringgit, boosted also by a share of profit from associates and foreign exchange gain. A year ago, the group incurred a net loss of 903.79 million ringgit. Meanwhile, quarterly revenue more than tripled to 2.23 billion ringgit. Looking ahead, the group anticipates high fares to persist and aims to reactivate all its aircraft by the end of the third quarter of 2023. It's that AirAsia Malaysia and AirAsia Thailand have been prioritizing deploying capacity to China to capitalize on the pent-up demand. The board expects the group to perform better than the previous year. Shares in Capital A closed down 1.89% to 78 sen, giving the group a market capitalization of 3.25 billion ringgit. Leong Bank reported an 18.5% year-on-year growth in third quarter FY 2023 net profit, thanks to lower impairment losses and improved contribution from 18% owned Bank of Chengdu. Earnings grew to 929.96 million ringgit, despite an 11% decline in net interest income to 846.65 million ringgit. MD and CEO Dominic Fuda said the bank remains cautiously optimistic with the business outlook for the remainder of 2023. The lender's stellar performance lifted earnings at its 64% parent Hong Leong Financial Group HLFG by 23.4% to 712.45 million ringgit. Apart from commercial banking operations, the group also saw higher contributions from the insurance division. Net interest income, though, dropped 9.5% to 876.39 million ringgit. According to its president and CEO Tan Kong Kun, HLFG maintains a cautious outlook on the economic landscape, given the challenging global headwinds. Shares of Hong Leong Bank were 0.92% lower at 19 ringgit 36 cent, while HLFG fell 2.5% to close at 17 ringgit 32 cent.